Hey traders, what's going on? Jamie Saettele here. It is August 5th, 2021, and welcome to the Power Hour with me, Jamie Saettele from Scandinavian Capital Markets and SB Trade Desk. Okay, so we'll start this week. Let's bring up, actually going to bring in a chart. There's been some talk about this on Twitter from various technicians and sentiment people. And this is one of my parts of my process, I guess, over every weekend, kind of go through the news, headlines and magazine covers and all that stuff to see if there's anything interesting in terms of sentiment. And we actually did have one over the weekend. So we have The Economist, which is known for its untimely analysis, if you will, of markets. And in this case, we have, you can see emerging markets growth problem with a rainbow going into a wastebasket, trash can, what have you. Basically, they are, I would say it's, they're promoting a bearish view, if you will, on emerging markets. And real quick here, this is a quick rundown of, this is actually from December of 2016, okay? And you can see here, this was back then when they had the mighty dollar, jacked up George Washington, because the dollar was very strong then. Well, that was essentially the best time, one of the best times to short the dollar. So basically you want to go against this. And I've got some other interesting stuff in this post as well. For example, we've got some things from my book back in 1978 time. Had a dollar with a black eye. We had here Euro shambles, essentially very much near the all-time euro dollar low. Not Deutsche Mark, but euro dollar. Let the dollar drop. Also, The Economist. Essentially, The Economist is one of the best things to fade. The disappearing dollar right at the lows. Sadness of Japan, which was right at a dollar-yen high. That would be a yen low. Great American downgrade, right? You can see this is time. So timing, The Economist, they like the whole George Washington black eye thing. That was right at a low. The falling dollar at a low. You get the idea. Panic about the dollar at a low. So point being that The Economist, again, came out with emerging markets, kind of in the crapper or in the wastebasket here, and we should be looking to go the other way. So with that said, one of the setups that we might want to look at here is actually kind of appropriate really right now, like as I'm doing this webinar, and that is Turkish Lira. So dollar Turkish Lira has been destroyed for well over a decade, and very, very close back. This is back. It was right before Thanksgiving, I remember, and actually caught a great trade off of this. But you can see here, go back to a little longer term. So it's a weekly chart. Okay, so weekly chart, you can see the long-term parallel here. That's it. Extend the parallel off the top. And we nailed the high here. Now, essentially since I'd say like March or so, I've been looking or waiting for us to maybe make another run at that parallel, and it has yet to happen. Obviously, we have massive divergence with RSI on a weekly basis. Okay, go to that daily chart. You can see here, and this was something that we looked at earlier this week. Again, with that cover, short-term trend line here, break it. We're now testing the underside of that line. So, let's see how we finish today, I guess, with Turkish Lira. But if we were to get a strong reaction off of this, that could offer, some sort of or offer an entry for a short position. Also, of course, you do have the possibility of a double top with the high here from November in our recent failed breakout. So again, still a work in progress here with the setup, but that's kind of where my head's at in terms of how to maybe play this cover, if you will, right, with the Economist. And bear in mind, these covers, while they do work as far as contrarian, setups, they don't always work like right away, right? Sometimes they do, but in the case of, if we went back to, say, what was that, DXY? So in December in 2016, right? If you remember that cover came out. This is DXY. That cover came out for like right over here. Okay, it was like right here for the Economist in December 2016. We held up for like one more month. Okay, and then the top was in for the dollar. So all I'm saying is be aware of the Economist, the sentiment. Be aware that we have a bearish sentiment extreme as evidenced by the Economist when it comes to emerging markets, but it doesn't have to, and it doesn't always happen right away, right? Sometimes you do get that final stinger, if you will, that final move. So, all right, interesting start to that with the possibility of getting something with emerging markets. And let's move on to our DXY and US dollar stuff. All right, so we have been looking for a pullback in DXY after filling the gap here, the uncovered close from April, and nailing that center line of the new median line. We did pull back perfectly. My view here, I'm thinking we've probably just got an A wave down and we're going for a little B wave higher. Okay. The level that I'm going to be looking for resistance is the close of that July 21st day. Okay. And that is going to be 92.78. All right. That is what we call daily reversal resistance. Let's see what the 618 is. 618 would be a little bit lower, 72 or 92.65. So we are looking at 92.65.78 for some resistance there in DXY, and I'll leave it at that. In terms of US dollar, US dollar, hold on here. All right, so with US dollar, this is again the quarter each of Euro, Pound, Yen, and Aussie. Bigger picture, it really just remains about we're kind of in a back and fill type period, in my opinion. You're going to have a bunch of back and forth, a bunch of short-term moves, which can be, quite profitable for the nimble trader. But bigger picture, we have hit major resistance and we reversed lower from that resistance. So I do think that we probably continue to pull back. Remember, we were looking for bigger support here, probably down in the 11,750 to 80 range. Now, yesterday we did have a big reversal, bullish outside day. So I am looking a bit higher here. We've got 11,940 to 11,950 as well-defined resistance near term. And as I mentioned with DXY, an A wave lower, probably something similar here, right? Probably something like an A, B higher, and then we can get that final C leg lower. Probably have something like this. Yeah, probably go something like that, right? Up in here over the next few days. So that's where I will be paying attention to DX or to US dollar, excuse me. Let's see if I have that drawn. There we go. Yeah, so 11,940 to 11,950 in US dollar, okay? Euro is sitting right on support, okay? Again, if we pull back a little bit more, then you're probably looking at, if I can find where the, let's go to the daily chart here. Whatever the close of that 721 day is, 1790. So you could pull back a little bit more again, and that would be in line with kind of what we're thinking with US dollar. If I bring in our futures charts, and we talked about VWAP last week, you can see that VWAP from that 721 low is actually support right now. So you could turn up here. Again, with the US dollar charts that we looked at, I would think that we probably pull back a little bit more. So again, focus a bit more on maybe that that 118 level, okay, for support in euro. Moving to cable. Cable continues to just press against this big resistance here. And I guess if there's somewhere where I'm totally wrong in terms of getting, you know, to get with the US dollar, we're talking about, you know, a little bit of strength, maybe then a pullback, you know, for a bigger C wave lower in the dollar. If there's somewhere where I'm totally wrong with that, and if the dollar is actually just a bull right now, or a bull again, I should say, then it would, the place where I'm, you know, where I would think that I'm wrong is British pound, right? That's because we've hit just beautiful resistance here. Again, just to the pip, center line, you know, rally back to the upper parallel, just perfect. We were looking for that 139.90, 140 level, missed it by a few pips. And this just looks ripe to, you know, to come off sharply. So, you know, we're short some pounds here, looking for, say, probably at least a 618 retrace here, which is going to be in line with that former low there. So, you know, kind of looking for 3730s, you know, which is a nice drop from here. So this is a great way to play, I think, near-term dollar strength. Is British pounds, probably my favorite trade. And I do understand overnight, you know, I woke up to headlines about, you know, BOE hawkishness, what have you. Well, bear in mind that really doesn't have anything to do with how I look at and trade markets. I do it this way, and it tends to work out pretty well, right? So, you know, ultimately, support, resistance, setups, which may include reversals and things of that nature, and my volume signals and VWAP and all that. That's kind of what rules the day for me. I don't really care so much about what was said or not said by, you know, a central bank governor or what have you. All right, so moving on. Dollar yen. So this has been, we had big reversal day yesterday. In fact, 2 days ago, we had this channel up here, right? And we were looking for support at 108.75 and resistance at 109.50, right? The reason we were looking for those levels is because, and I can bring up a chart that would show you that at the time. Here we go. Let's see here. Trent says great stuff. Thanks, Trent. All right. So we had this was a bit on the 3rd, and we wrote here we may have a bearish channel to work with. Notice how the 25 line was precise resistance on Friday and Monday. Former support 109.35, that's resistance. 75 line 108.75, that's support. So that was the chart at the time, okay? This, again, and I go through this all the time, and this is what we call symmetry, median line symmetry, okay? That is, resistance was on the 25 line, so you'd expect it to oscillate between the 75 and the 25 lines. That's it, okay? And sure enough, that's what happened. So where's the trade now? Well, right now, we're looking at this center line here, right? Which you can see has been support several times, right? And we would like to see that provide support for a long entry. This is, again, kind of in a shorter term range trade, you know, back and fill type of environment. So, you know, 109.10-ish is where we would be looking for support. And then, you know, taking it up close to 110, you know, 109.90 or so, and that's it, you know, kind of trading that range for now. If we were to break out above this, then I'd get pretty bullish actually on dollar yen, and here's why. Okay, so here we go. So yesterday we had, this is Japanese yen futures, and we had a volume signal, a daily volume signal in Japanese yen, okay? A bearish daily signal. And again, what does that mean? Well, that's a bullish dollar yen reversal, right? A bearish yen dollar reversal is a bullish dollar yen reversal. So the last time we had something like this, of course, was actually January 6th, which would have been, well, the best time in a long time to actually sell yen, and that is buy dollar yen. So you can see these are all the signals, right? A lot work pretty well, some don't work. That's just, you know, how this goes. But yeah, we've got a big signal here yesterday, and yeah, if we were to break through again with that dollar yen chart and break through that trend line, then you would have reason to be pretty bullish dollar yen. Okay, all righty. Okay, moving on. Go to Aussie. $74.15 continues to just provide great resistance here in Aussie. If we were to, this is what we've got here, is it appears to be a little bearish wedge action in Aussie. So the signal for that, or the trigger for that, I should say, it looks to be about 73.50 or so. So if we were to, you know, break that, you'd want to adopt a bearish view for the next leg down, and just a simple measured move here, take the width of this, subtract from the low, is going to get you about 71.50. Okay, so that's where we're looking at with Aussie. Obviously, if we break back up through this, then that's off the table and something else is happening. But as it is now, that's what I'm looking at for Aussie. Basically, 73.50 is all we are paying attention to, right? Kiwi. Love this setup. So Kiwi, we had talk about, this is awesome. Talk about symmetry. So this was another thing that we had. This was Kiwi, again, from 2 days ago. 71 might be in play for Kiwi. Level's been a pivot since December. It's also near the 25 line within the channel from the February high. Since the 75 line was support twice, we should expect resistance near the 25 line, right? Symmetry, 75 line, look for 25 line. Guess what happened? This was after we had, I guess, the jobs numbers out of New Zealand, right? Bang, 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 to the tick, almost. Okay, so what we're looking at now is we are looking lower, basically against up here. We are looking lower for lower parallel and the center line, which is an intersection near 69.50. Now, what happens down here is kind of important. Well, first of all, if we get there, I should say, because if we get down here and we rip higher, then maybe something else is happening. If we just slice through that, then we just kind of resume with our broader downtrend, view that's been essentially going on since February, right? So that bottom line, Kiwi looking lower here and towards 69.50.60. At dollar CAD, we actually had a short position yesterday up here, and then kind of got rid of it. Not kind of, I got rid of it because I was that dollar bullish outside day kind of changed my mind. So I don't know. At the moment, that's looking like a dumb decision because frankly, because CAD's actually stronger on the day by a bit. Anyway, though, if we do get another run higher in the dollar, maybe we fail up around 25.90, 26.10. And I'm thinking 23.15 is support now for dollar CAD, but not real sure. But CAD is unclear to me at the moment. I'll leave it at that. Not real sure what's going on there. Okay. Dema writes, Jamie, you've been right on silver and Bitcoin. Bang on. Keep it up, mate. Thank you. Love to see your opinion on Bitcoin, oil, nat gas, silver, and gold. Sure. So let's go through some of those commodities. Well, Bitcoin, I will tell you, probably just about the same. So yeah, we were looking at that run, the final run into 42,000 or so, and we got it, right? So one of two things here. From my vantage point, we're either in downtrend, I'd say towards 20,000 is the next stop. And again, this is we just looked at the various symmetry tendencies with median line analysis, and we saw it on dollar yen on a short-term basis. We saw it on Kiwi dollar on a bigger picture basis. 20,000 would be right about where you want to end up in terms of the symmetry for the longer term channel on Bitcoin, because right here, okay? So yeah, get down there, 20,000. That would be the perfect symmetry level. Now, if I bring in Bitcoin. Here you go. So this is massive resistance. One reason I actually have a fairly confident view that we are headed a lot lower in Bitcoin is the fact that VWAP from year to date, right, 2021, and VWAP from the high both provided resistance at the same level on that last run higher on July 30th, okay? Also, VWAP from the March low is going to be about 21,600. Guess what? That's also the channel low down here. So we've got the VWAP here from the March low. We've got this channel, and we've got, as I mentioned, the 75 line or 25 line here, and we hit the underside of this channel. Essentially, everything that I look at says that we have put in the next top, and that we should be looking towards 20,000. So that is my view right now until noted otherwise, right? Is that we are headed for a test of that December 2017 high near 20,000. All righty. Hey, Mohammed says, thanks for posting on Telegram. You got it, man. Which reminds me, if you can see it, I think at the bottom of the screen, there should be a link to Telegram. And, you know, there's a link at the bottom of the screen. Check it out. That's Telegram. You'll get all the updates and everything that I put out. All right. Okay. Bitcoin. What else did we want? We wanted to look at, I got it here. Oil, nat gas, silver, and gold. Yep. All right. Let's go to silver and gold first. So silver, this was actually yesterday's part of yesterday's post. First of all, let's go back a year ago. Exactly, just about. Right. So we've been sideways for a year. This is last August. Remember how bulled up everybody was? Everyone was a dollar bear and everyone was a metals bull, right? Well, we've gone absolutely nowhere for a year now in the metals. Eventually, this probably resolves to the upside on a very, very long-term basis. However, near term, we hit great resistance here yesterday, reversed lower, sharply lower. So I am still a bear here on silver, looking towards, let's call it 23.15, 23.80, right? Simple low for March. And then this is the close of the low day from last September. Obviously, you've got great reward to risk here. Risk is just above the high from yesterday, and you're looking down here. So that is a massively skewed opportunity on the short side. All right. That was silver. If we can look at gold. So you've got this 3 waves down. Not sure what this is. 5 waves to the downside from up here. A little meandering. You could envision something where we're sideways in something of a B wave triangle. A, sideways B, maybe final spike C. If that were to happen, I'd be looking to fade 1850s. So right now, frankly, I don't have much of a setup in gold. I have a pretty good setup in silver, and that is on the short side. Gold is not that clear to me right now. Sometimes that happens where one's clear, one's not. But if we were to get a spike into 1850, I'd be interested in the short side on gold. Until then, just watching and observing, and not too interested in gold on the long or short side. Okay, so we did that. We want to look at oil as well. Here's crude. Let's remember that we hit gigantic resistance. Here's a weekly chart. Okay, we hit resistance that goes back to the July. This is a trend line, right? 2008, 13, 14. We hit it, I guess, early July. Well-defined horizontal level as well. If I go to the 4-hour chart, I mean, this is set up for a nice drop. It's kind of that simple. The 38.2 retrace of the rally from the last leg up, which is from the November low, is going to be about $60. So that's kind of where I'm looking. On a near-term basis, we actually might have a bearish fork to work with here. Let's see if we do. That's a bit steep, but yeah. Just looking down, I'm looking towards $60 after this huge failure off of massive trendline resistance. After that, reassess. Let's go to nat gas. Oops. We're at resistance just about in nat gas. This is like a really long-term cycle in nat gas too. And we did end up bottoming on it, pretty close to it, and turning up. However, we're back on resistance now. This is the 25 line, okay? You can see the resistance here, or sorry, the trend line here, excuse me, back to the 05 high. Resistance, resistance, resistance. So that line's going to be 425, okay? So see what happens there. We are very close to it. And I think that's all of them. Yep. So we looked at Bitcoin, oil, nat gas, silver, and gold. All right. Okay, well, that is it for me. We've got the opening bell here in the United States. Just about made me go deaf in my ear. I always forget to turn that off. And I'm going to get back to the markets and see what there is to do, if anything, right now in terms of my positioning. So have a great, great day. Gary says, very good session. Thank you. Thank you, Gary, very much. Thanks, everybody, for tuning in and listening again. Do these, for the most part, every Thursday at this time. Sometimes there is a scheduling conflict or something that occurs, and we might move it. But for the most part, we do these, especially as school gets back in session, have a more regular schedule as far as being a dad. Don't have to worry about camps and all other stuff. So for the most part, we're here at this time every Thursday. All right. Again, Jamie Saettele here with Scandinavian Capital Markets and SB Trade Desk. And take care. Have a wonderful rest of your week. Talk to you later. All right. Bye.